When an investor decides to start putting money into the market, the first thing on their mind is usually returns, and understandably so. After all, they're looking to grow their wealth. But here's the catch: while returns are crucial, there are other factors that tend to weigh heavily on their decision making process. For example, one thing that often gets overlooked is fear. I'm not talking about rational, calculated risk, but the kind of fear that can take hold when uncertainty kicks in. Fear, unlike risk, isn't always grounded in logic. It's that irrational feeling that makes you want to hesitate or even run away from perfectly good opportunities because you're unsure about the outcome. But let's start with time. When investors think about where they want to place their investments, they focus often on returns. But the time horizon or how long they plan to stay invested is just as important. So here's my advice for any investor. When you're starting to invest, start with the time period in mind. For instance, if you know you need the funds in a year's time, then that pretty much rules out any sort of investment which cannot give you a fixed return. So, no matter how much you're attracted to gold, real estate, or crypto, they're not right for someone looking for short term certainty. The only options that are really available are either fixed deposits or short term debt funds where the returns are predictable. But if you're investing for the long haul, let's say 5 to 10 years, then this gives you time to ride out the volatility in markets. Take real estate for example. Let's say that you bought a property today. Probably in the next 1 year, you may not see much appreciation. You might even see dips. But over a longer period of time, as cities grow, the infrastructure improves, there is more demand because more people are coming into the cities, then the property tends to appreciate. And the same logic applies to other asset classes also. So, volatility can be hard to stomach in the short term, but over time, it's often smoothened by the long term in which markets grow. Coming back to the fear aspect, when you have a longer time frame but you're still unsure about the outcome due to market fluctuations, you might hesitate to put your money into riskier assets like mutual funds, equities, gold, etc. The fear that your capital will get eroded can make you freeze up and avoid making decisions, which is equally bad. This is where it's important to understand risk and return. Now, this is a very well worn out phrase: higher risk equals higher return. But just because something is high risk doesn't mean that it is suitable for you. Here's the thing: if you're someone who panics at the time when there is a downturn and tends to exit, then you're likely to lock in losses instead of getting higher returns. This defeats the whole point of staying invested in the long term. Folks even get into more complex assets like futures, options, or crypto. They throw money at the asset and hope for the best. But this can backfire quite badly. This is where education plays an important part in our investment journey. It's crucial not just to understand what the asset is, but also how it behaves over time, how to manage its volatility, and how to align it with your long term goals. Another point I want to emphasize here is diversification. Fear can sometimes push us into making rash decisions and exit when the timing is wrong. Having a diversified portfolio can mitigate that. This is because when one asset class drops, another asset class might be rising or at least might be stable. And this helps us stay anchored to all the assets in our portfolio. In conclusion, it comes back to this: define your time horizon first, whether you're looking for short term gains or long term higher returns. Understanding your investment pipeline can help you shape your strategy. Once you nail down the time frame, then take the time to learn about the risks and returns of the asset class that you're assessing at that time. Fear tends to thrive in uncertainty, but the more you know, the less you'll be swayed by it. With the right mindset, a bit of patience, and an understanding of how the asset behaves, you will be able to ride out the market volatility. In fact, it will seem less like a threat and a part of the long term journey towards growth. So, I hope this helps you in your investing journey. If you have any queries, please do drop a comment or write into us, and we'll be happy to get back to you. Thanks for watching.